With the mortgage calculator. Today we're going to go through some live mortgage rates and then do a deep dive into bank statement loans. We'll wait just a couple of minutes here to get started. Let us go live on all the different platforms and give everybody a chance to jump on. We put the chat up on the screen, so feel free to drop a comment as you tune in. I see there were some comments already coming in. Appreciate that. Thank you for tuning in nice and early. We'll get started here in just a moment. Great topic here for today that we're going to do a deep dive into. Very popular product, especially right now. So just hang tight with us and we'll get started in just a moment. Appreciate those comments coming in. As we go through here today, feel free to keep dropping those comments. Appreciate that. All right, it looks like we are live on all the different platforms, so we can go ahead and get started. We're going to take the chat off the screen, but please keep dropping comments there in the chat, and also feel free to drop any questions that you have as we go through the presentation here today. So welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. What we do on this show every day is go through some live mortgage rates, and then we do a deep dive into a different loan topic. Now, today's topic is going to be bank statement loans. This is a very popular product right now, especially with us here at the Mortgage Calculator, because we specialize in non-QM loans, and this is definitely the most popular non-QM product right now, especially for primary residences. So our sales manager, Jose Gonzalez, with 28 years of experience as a loan officer and a realtor, is going to do a deep dive into bank statement loans. But before we do that, we're going to pull up some live mortgage rates. So Nick, if you're ready, let's go pull up our pricing tool and see what the rates are looking like this morning.
All right, switch my screen and we will check it out. So this is our pricing tool for our team here. This will show us the general rates and the APR for today is October 13th, just after 11 a.m. Eastern. So all these standard rates are live. So we'll set up a basic scenario to compare across the programs here. It's like a full breakdown, a full loan estimate. Please get with our team. We have over 400 loan officers in 24 states. Let me zoom in a little bit here. So for the demo today, we'll set up a scenario, a $400,000 loan amount for all the demos. We'll set the LTV to 80% loan, 20% down payment. We're going to look for the lowest rate possible. And we're going to check out our conforming conventional programs, then go into FHA, and then check out our non-QM, also known as expanded guidelines. We have VA and USDA. VA is only for eligible vets, so if you are eligible, let us know. We can quote it no problem. And USDA is only for eligible properties. If you do happen to be shopping in one of those areas, just let us know. We'll start with conforming conventional. We'll do a purchase 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. For all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio of 40. So with these settings, like we do every day, let's check out the lowest rate options. Went up a touch from yesterday here. It looks like the best option, 7.25 rate, 2.25 discount points and costs, puts the final APR at 7.458. So definitely better than it was a couple weeks ago, but definitely keep in tune with the markets as these things fluctuate daily. Now, if for any reason our customer doesn't qualify for conventional, typically the next option we want to look at is FHA. So we'll set up the same exact scenario and we'll check out the lowest rate options for FHA today. Everything else will stay exactly the same, even though FHA does allow a little more credit leniency as well as a higher debt to income ratio. We'll keep everything exactly the same so we can compare. And FHA went up a touch too. It looks like 6.49 rate, 2.375 discount points and costs, puts the final APR at 7.129, which is still just a touch under conventional if our customer qualifies for both. So definitely recommend our customers that qualify for both. Don't look over FHA, could be a great option. This APR does include the upfront and yearly mortgage insurance. So for our customers that must use it, this is still a great option as well. Now, where we love to help our customers is if they can't qualify for either program. Fortunately, many other banks or lenders have to deny that customer, but that's where we have over 5,000 additional options under expanded guidelines, also known as non-QM. So when we select this option, we can choose a new income. So we get a new option that pops up for income. Full doc is what we use for FHA and conventional. So we'll typically choose an expanded guideline program to take advantage of one of these other options. Asset related options, business bank statement options. These investor programs are just for investment properties. We'll talk about that in a minute. Personal bank statement 12-month is what we use for the demo. That's the most popular. We also have RSU, stated, VOE, 1099, P&L. We did a bunch of these on the shows this week, so check those out. But the most popular is personal bank statement 12 months, which will also be our topic for today. Jose will go into some detailed bank statement examples. And this is for our self-employed borrowers. Many times it's our self-employed borrowers when they submit 2 years of tax returns, may have various write-offs and may have trouble qualifying or just may not quite get enough income to get that home they really want. So we can solve that problem. No tax returns at all, just their last 12 bank statements to determine a debt to income ratio using just their 12 bank statements, the cash in the bank. No tax returns at all. Therefore, our self-employed borrowers usually qualify for double or triple the income using this method. So let's check out the options today for bank statements. All right, best option here at the top, 7.375 rate. 2.5 discount points and cost puts the final APR 7.492. So almost identical to conventional here with our bank statement options. Now there's tons of variations here. There's hundreds of different options here. Once we go into bank statement, that's why Jose is going to do a deep dive into some specifics. But some of these down here at a little bit higher rates and costs may allow bankruptcies or foreclosures or other ways to calculate income to solve many other problems that our borrowers could possibly have. So tons of options once we get into non-QM to not only use alternative income, but get around other guidelines as well. Now, before we go into Jose's bank statements, we want to do some live pricing for investment properties. So we'll set up the same scenario, 80% loan to value, 20% down payment. And we can buy down a little bit lower for investment properties, and we'll compare our conforming conventional options to our expanded guidelines, also known as non-QM. FHA, VA, USDA, all the government programs do not work for investments, so those are not applicable here. We'll just compare these two. Start with conforming conventional, keep everything identical to all our other demos. The only thing we've changed here is the occupancy. So let's see what the conventional programs have added for adjustments here. So this is a little confusing, but this is definitely where our unique programs can come into play. So we have a portfolio option here that does follow the Fannie Mae guides, but it's not actually a Fannie Mae or conventional loan. Technically, it's a portfolio loan from one of our partners here, but the rates are amazing because they don't have to do the loan level price adjustments that Fannie Mae and Freddie Mac have. So 7.125 rate, 3.5 discount points and cost, puts the final APR 7.375, basically the same as primary because there's no adjustments there. Whereas you see here, the best option under the standard programs pushes the rate up because the adjustments that the conventional have added to investments in second homes. So the best option with a true conventional program, 7.875, 3.125 discount points, pushes the final APR to 8.113 there. So definitely recommend to check out those unique portfolio options that we have if we have customers looking for more standard conventional. Now, most of our customers still want to see other options, so that's where we love to present our other non-QM options that are traditional here. So we'll set up the final demo for investment property, 80 LTV, and we will choose expanded guidelines, also known as non-QM. So now we need to select income. Most popular income for an investment property is going to be DSCR. That stands for debt service coverage ratio. Basically, we're going to use no income or employment from the borrower, just the estimated rents from the property to determine that debt service coverage ratio. If the estimated rents can cover the PITA of the mortgage, that's a ratio of 1.0 or higher, aka the property cash flows monthly. Even if the property does not cash flow monthly and the ratio is under 1.0, we have options. For the demo, we always put 1.5 so we can see all of the programs pop up. And we must select a prepayment penalty for an investment property under the non-QM programs. 3 years is standard. There are programs with 0 that will cost more and limit the amount of programs that show up. And there are programs that allow 5 years, which will save some money, but does limit the amount of loan programs. 3 years is standard, so that's what we always use for the demo here. So let's check out our DSCR options. All right, amazing option here at the top, 7.625 rate, 3.375 discount points and costs, puts the final APR at 7.771. So this beats actual conventional by a long shot, but that cool portfolio option we have actually does beat this, so definitely check that out. But most investors, if they're comparing a true conventional to a DSCR, especially today when DSCR is 0.4 cheaper, absolutely amazing. I'd say 100% of investors that are presented these options will choose the DSCR because it's cheaper and more flexible and more advantageous to investors. And if you see this one here too, the second DSCR option at the APR of 8.017, that also still beats the conventional. So we have 2 DSCR options today. Yesterday we had 3 that beat conventional. So that's pretty amazing. Definitely DSCR is the way to go for our investors. It's getting very aggressive out there compared to conventional. And if you scroll down here, there's tons of different options. Always want to mention that some of these may allow bankruptcies, foreclosures. Some of these may allow different ways to calculate income, such as short-term rental income, very popular request. So tons of different options. Get with our team. They will find the best one. Now I'll go ahead and switch my screen and we'll introduce Jose's topic for today, which is going to be bank statement loans. So we do bank statement loans every day. The standard demo, 12-month personal bank statements on a standard 80 LTV loan. But this time, Jose will go into some more detailed examples, probably different LTVs, investment property examples, etc. So there's all kinds of different ways to use bank statements. So we do that every morning. That is the standard version of the bank statement loan that we kind of run through. But there are a ton of variations here. So Jose, if you're ready, let's go ahead and show them some specific ways to use this program.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you this morning. As Nick was mentioning, bank statements is definitely our most popular option. Not just our most popular option, it is the most popular non-QM option. As you all know, in the beginning of 2022, markets started shifting, rates started increasing, and we unfortunately haven't looked back since then to any lower rates. What has happened is that the loan origination has transitioned from from full doc agency to non-QM, and specifically non-QM bank statement option, which I think the last time that I looked makes up over 60% of the origination in non-QM loans. So one of the nice things about the bank statement option is that since it is so popular, since there is so much money going into secondary for bank statements, their rates and pricing is very competitive. Usually a bank statement option loan will have the same or very close to the same pricing as a traditional full doc loan using tax returns and pay stubs or whatever it may be for that full doc option on the non-QM side. So a non-QM full doc and a non-QM bank statement may have the same exact price, or at most could be a quarter of a point off in cost at all. So consider that when you are originating your non-QM files. So many self-employed borrowers who were priced out of their traditional full doc pre-approval. Luckily, we're able to convert those pre-approvals to bank statement pre-approvals, and we're able to purchase the property or refinance whatever it is that they wanted to do. So definitely great to be at the mortgage calculator to be able to offer options other than your standard cookie cutter agency loans. So today I'm sharing with you some purchase options and some refinance options, both for primary and for investment properties. So our first example here is a primary 1 unit purchase. It is at the maximum LTV of 90% for bank statements. And as always, with all non QM loans, there is never any mortgage insurance applicable. So in this case here, we have 10.625 is our lowest cost option, and you can buy that down to 9.75. And again, this is 90% LTV, 1 unit. And as we always like to do, we like to always show our 2 to 4 unit options. And we'll be glad to say that there is not, as is also usually the case, there is not a loan level price adjustment for a 2 to 4 unit property versus a 1 unit. So it is safe to say with this particular option we chose, 1 to 4 units has the same rate, same cost, and not something that you can say necessarily for agency. And now our investment purchase option of a 1 unit, maximum LTV is 85%. Now, note there are options, obviously, other options at 80%, which are going to have a little bit lower rate because 80% is the more standard LTV for the investment property bank statement. But at 85%, this is which is the highest LTV, this is our best option. You're looking at 10.375 as your lowest cost option, and you can buy that down to 9.25%. And our investment 2 to 4 unit, again, happy to say 85% LTV on that 2 to 4 units. So just imagine that, buying a 4 unit property using bank statements, investment, 85% LTV. Simply amazing. So 10.375 is our lowest cost option, and you can buy that down to 9.25%. So got a couple of refi options for you. So I just went ahead and I'm giving the 2 to 4 unit option, which is going to be the same LTV as the 1 unit, but I wanted to take it to the maximum just in case, as most of our house hackers out there love to do. So this is for our bank statement primary for a 2 to 4 unit cash out, 85% LTV on the cash out, which is the maximum LTV. And that's 10.375 lowest cost option, 9.5% lowest rate option. And our last option here is our investment cash out for a 2 to 4 unit. And maximum LTV for this option is 80% for a cash out. No loan level price adjustment either for the going 2 to 4 unit. So lowest rate option is 10.999, and you can buy that down all the way to 8.874%. So pretty amazing. Just imagine this being 4 unit investment bank statement cash out, 80%. Remarkable.
All right. I don't see any questions there. Again, remember, this is probably it is the most popular non-QM loan out there. So all you loan officers, make sure you have it in your arsenal and are very familiar with it so that you can help everyone with this product.
Yeah, this is a great product. Just imagine you could have a borrower that if the only route you know how to use to originate is using tax returns, full doc, that borrower could have $3,000 a month income, qualified, basically definitely not for what they probably want because but with the bank statements, you could have, $15, $20, $25,000 a month in income. Totally different profile there for your borrower, who could pretty much afford to buy whatever he can choose to want to buy.
All right. Well, remember everyone, we do this show 11 a.m. Eastern every single weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be right back here next week with a new topic to talk about. Thank you everyone for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all on Monday for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone. Have a great weekend.
Thanks, everybody.
Thank you, everybody.